Natural gas prices, they spiked to a 52-week high earlier this week following reports of a colder than usual temperature forecast for January. That is what we call an understatement. We're supposed to get what's called the polar vortex. I know. It's going to get really cold.
Please no.
Could have 2 feet of snow in parts of Virginia and maybe North Carolina because they do great with snow down there.
Can't handle it.
In the meantime, Ukraine halting the flow of natural gas from Russia to several European nations on Wednesday. That brings an end to Moscow's 60-year run of natural gas, 60 years through the same pipeline through Ukraine. The question is, where does it go from here and what does it mean for us? Joining us now to talk about all of this, including his outlook for global energy prices this year, is Jonathan Maxwell. He is the founder and CEO of Sustainable Development Capital. Jonathan, good to have you back on. Natural gas here in the United States. I mean, God, Europe would love to have ours spike. They're paying $50. We're paying $3.50. That said, do you think this spike that we're having here is short term based on this weather forecast?
So very probably not. So one of the things that I find amazing about this story of Ukraine's 5-year transit deal not being renewed. So as of yesterday, there's no gas flowing through that pipeline through Ukraine into Europe. One of the things I find amazing, actually, is that we've now got more dependence on the United States in Europe than ever before. In fact, about 40% of Europe's LNG comes from the US. There's a huge pressure growing on gas prices here in Europe. They're up about 70% in 24 versus over 20% in America. And I think that there is a very substantial risk that that's going to continue. I think we're even looking potentially at futures trading higher for the summer this year. We've got substantial gas reserves, but surely there's a risk here that the sheer weight of demand kind of coming from Europe against supply constraints is going to drive prices globally.
Jonathan, I look, U.S. prices are still incredibly low, sort of relatively, like $3.60. We were up at $9, during the peaks of 2022. We're nowhere near that. And yes, even though there's going to be, look, we first U.S. exports of LNG 2016. By 2023, we were the biggest exporter on the planet. And our gas prices in 2023 and 2024 went nowhere. They basically were around $3, about where they are now. You'd think if we were sending all of this gas and there's this huge... And so even if we ramp up, to meet that demand that's coming, this big demand spike, we're supposed to bring online 70% more capacity in the next couple of years to the U.S. Isn't that likely to keep a lid on prices from spiking much more from here?
I think European prices, though, have always been much, much higher than in America. And the point that you're making is really since 2019, in particular, America's become the largest oil and gas producer in the world. Europe isn't. I mean, Europe is an importer. Its energy dependency has gone up, not down. The UK, where I'm sitting, energy dependence has gone up, not down. The government here talks about energy independence, but we import 76% of our energy. I think America's in an incredibly powerful position. Having said that, there are risks on the price side. And, you are going to see very substantial demand coming from Europe, in particular into the United States for imports of LNG. And that's going to have an impact. Now, there is a very positive side to this from a financial perspective. The incoming Trump administration looking to relax export permits on US LNG projects. There was, by the way, a perhaps last-ditch piece of news. It's unconfirmed today that the Biden administration is looking to permanently ban drilling for oil and gas in targeted areas of US waters before the end of the administration.
Yeah, it's not good. I don't think it's going to happen.
I mean, the judge halted the last attempt that they had.
It's the White House's attempt at the end to send up a signal flare. Jonathan, this should not be new news to any CNBC audience. I mean, we've been covering this European energy story now for going on 4 years. Is there a way to look back and say what was the main mistake or mistakes that Europe and its leaders made? Because Europe and the UK is in really bad shape.
Well, look, for sure. I mean, we have had relatively little investment in baseload generation in the UK and Europe. There has been relatively little investment in storage in the UK and Europe. There are enormous investments happening, which I'm delighted about, running a sustainability company in renewables. But at the same time, the energy system needs to sort itself out. The biggest piece of it, though, the biggest piece that I would refer to is as follows: Europe extraordinarily wastes enormous amounts of its energy, and I'm afraid the US does too, but it matters even more in the US, in Europe. Roughly 2/3 of the European energy system, when it comes to making electricity, for example, roughly 2/3 of the energy used to make electricity is lost through, basically through generation, through natural gas systems, through transmission and distribution, let alone at the point of end use. The biggest mistake that Europe has made is not being efficient as importer with the application of the energy that it has to buy from overseas.